Hey team, hope you're having a great day. Our next analysis is on pound CAD. Now, our previous signal on this pair was a winning trade, and I want you to notice that after a winning trade or even after a losing trade, we remove all area sensitivity and then we reanalyze starting from the monthly. And what this does is it refreshes the story of this pair. The vast majority of traders after an execution, regardless of a winning trade or a losing trade, will leave their area sensitivity on their charts intact. So zones and trend lines, you got to remove it all. And then the next time you do an analysis, you start from the beginning so the story is fresh in your mind. Because remember, price movement is a story. It's telling us what's happening if we read it properly. So let's get to pound CAD and have a great day.
All right, pound CAD, here was our previous signal. We entered on double confirmation at the close of a bullish engulfing candle. We exit at TP2. Now, what happens after our targets are reached? That's right, we wipe it off the screen, we take it back to the monthly, and we begin our analysis from the beginning. We've taken it back to the monthly. We identified our monthly zones because we see horizontal area of sensitivity across the board. Okay, so after identifying our zones, now let's talk about flow. Here we see a push, here we see an exhaustion. Sellers enter the market at mid-range zone for a continuational push to the downside. Before we take it down a time frame, what I want you to notice is that price tried to break its monthly lower zone to the downside twice, and buyers said no, keeping price to the upside. So we know that this zone has a lot of buy sensitivity. So in summary, we know that there's a lot of sell sensitivity up top, a lot of buy sensitivity below, meaning that price is playing within its range and will likely consolidate before then making a move. So let's take it down a time frame, see if there's a play to be made. On to the weekly. What do we do first? That's right, we look for our mid-range zone. We see sell sensitivity, so we identified our weekly mid-range zone. So after identifying our zone, again, let's now make sense of things. So we know that there's a lot of monthly sell pressure. We know that there's a lot of monthly buy pressure. And now we identified our weekly mid-range zone. So it's safe to say that if price breaks this weekly mid-range zone to the upside, we know that there's enough buy pressure to send price to our upper zone. And if it fails to break this weekly zone to the upside, well, sellers won't let price move any higher, meaning that price will likely come back to retest its lower monthly zone. So what the weekly is telling me is that this weekly mid-range zone is the key indicator. If price breaks above, we're going long. If price stays below, we're going to look short. Now, before we take it down a time frame, here's just some pattern recognition to be aware of. We have a potential head and shoulders, meaning that if price follows this pattern, it will continue to the downside. Now, that doesn't mean we're going short. That just means we have to be aware of this as we go to the lower time frame. We've taken it to the daily, and here we've identified our uptrend because we see higher lows. Now, what this does is confirms continuous buy sensitivity coming off of our monthly lower zone. Okay, so we're on the daily, and for those of you who have been with me long enough, you know that once we're on the daily or the 4-hour, we start to pay attention to potential areas for entry, okay? So let's summarize this time frame and look for what makes sense. Okay, so we know that there's a lot of buy pressure coming off of our monthly lower zone. We know that price is getting squeezed and pushed towards our weekly mid-range zone, where then it needs to make a decision whether it's going up or it's going to continue to the downside. So now let's look at price action and identify the story that price is telling us. And whenever we want to identify a story or see what the time frame is telling us, we have to go to what we know, which is pushes and exhaustions. This tells us everything. So when we look at more recent price action, what do we see? Well, we see a strong bullish move to the upside, and price is now reaching its weekly mid-range zone. Now, what do we know about our weekly mid-range zone? We know that it's an area of sensitivity. We know that there will be some sell sensitivity in this area. So here we have a strong, significant move reaching an area of sensitivity. What's this? That's right. That is a push. And where is the most likely area for price to then begin exhaustion? That's right, at its weekly mid-range zone. So now we can expect some type of an exhaustion before either a continuational break to the downside or a continuational push to the upside. In my opinion, price will make an exhaustion and a continuational push to the upside. Why? Well, we see continuational buy pressure, aka our uptrend, meaning that price is getting squeezed. Once price comes back down for completion of exhaustion, there's still some room for another squeeze. I believe price will require a few touches of this weekly trend line before then breaking to the upside or continuing to the downside. So I do believe that we will see another cycle to our weekly mid-range zone. All right, entry one, this is the screenshot you're gonna get, so let's make sense of things. We know that price completed a push to its weekly mid-range zone, and we're now waiting for completion of exhaustion before looking for price action confirmation to the upside. And why completion of exhaustion? Because completion of exhaustion is where winners enter and losers will enter at a completion of a push. Now, when I say losers will enter at a completion of a push, I don't mean that as an insult. I look at trading like a sport. Just like in soccer, basketball, hockey, football, whatever game you want to play, there's a winner and there's a loser. And in any execution, you either won or you lost. So when I say losers, I don't mean that as any insult, just take it as it is. Now here's the reason why I like this trade. As we spoke about, I believe that price is going to begin exhaustion and then make at least one more push to its weekly mid-range zone. So that is why TP1 is where it is. When price comes back for exhaustion and we enter long, after we hit TP1, we move SL to entry. Now here's why I like this trade. As we spoke, price is going to make an exhaustion and then make a continuational push to its weekly mid-range zone. Now, that's why TP1 is where it is, because after price hits TP1, we move SL to entry, and due to the buy pressure, it's not unusual that price could break its weekly zone to the upside, and if it does, it puts us in this great risk-reward position. Now, there is a definite possibility that price may find the sell pressure it needs at TP1 before making a continuational push to the downside, because we identified on the higher time frame that this could be a right shoulder on a higher time frame head and shoulders pattern. Now, that's the reason why I like this trade, because we're likely going to reach TP1, allowing us to move SL to entry. And if price does break its weekly mid-range zone to the upside, we know that we're likely going to see a move to our monthly upper zone, giving us really nice risk reward. Now there's two scenarios that would make this trade invalid. If price fails to come back for exhaustion and continues to break its weekly zone to the upside, we know that there's not enough sell pressure to bring price to our entry, so this entry becomes invalid and we readjust and look for entry at our weekly mid-range zone. Now, the second scenario that would make this trade invalid. Let's say price comes back for an exhaustion, does not see price action and needs for an entry long, but in fact sees continuational sell pressure pushing price below this uptrend. This means that there's not enough buy pressure for our move to the upside, and likely the head and shoulder pattern on the higher time frame is coming into play. So then we readjust and we look for an entry short, and this trade becomes invalid. But of course, the highest probability play is that price comes back for exhaustion and then sees the buy pressure it needs to at least hit TP1. Hence, this is why you're getting this signal.